All right, so we're diving into investment strategies today.
Yeah.
We've got a ton of info here from pasted text.
Sounds like a lot.
It is. It's a lot. It's like a buffet
Okay.
of different ways to approach investing.
Mm-hmm.
Our goal today is to really break down each of these strategies.
Okay.
So you can understand what makes each one tick,
I like that. Yeah.
and hopefully even
Yeah.
spark an idea or two for your own portfolio.
Yeah, absolutely. Because, every investor has a different goal, right?
Right. Exactly.
Everyone's
Sure.
trying to achieve something different with their money.
Totally.
So we're here to help you figure out, okay, how do I choose the best path for me?
Yeah.
What do I actually want to do with my money?
Yeah. That's what we're going to dive into today.
Awesome.
Okay. So first up,
Okay.
value investing.
Ooh.
It's like channeling your inner Warren Buffett,
Uh-huh.
not chasing the latest hype,
Right.
but really
yeah.
looking deep into a company's financials, their earnings, assets, the whole picture.
So, really understanding a business.
Yes, really understanding a business.
Well, not just, following the trends.
Exactly.
Yeah.
So what's fascinating is that value investors, they're not just looking at what's hot right now.
Right.
They're looking for those hidden gems that the market might be undervaluing.
Interesting.
So they use all these metrics
Okay.
like price to earnings ratio, book value,
Mm-hmm.
to identify companies
Well,
that have strong fundamentals,
Right.
but a stock price that doesn't match their real worth.
Interesting.
So it's like finding a treasure at a flea market,
Yeah, you're sifting through all those,
Yes.
the old records and the
Yeah.
dishes, and then you find,
A diamond in the rough.
a diamond in the rough.
Exactly. That's a good analogy.
Exactly.
So if you enjoy digging into those financial statements
Yeah.
and feeling like you've outsmarted everyone else,
Oh, I love that. Yeah.
this might be the strategy for you.
I can see that.
Now, on the flip side,
Okay.
we have growth investing,
Okay.
which is all about riding that rocket ship.
Okay, so tell me more.
So we're thinking high growth companies,
Mm-hmm.
emerging markets,
Oh, interesting.
the areas that have the potential to just explode in value.
So you're really looking for that big payoff in the future.
Exactly. You're betting on the future.
Got it.
With growth investing,
Mhm.
you're embracing a higher risk tolerance.
Right, because you're not sure it's going to pay off.
Exactly. You're not sure it's going to pay off.
But if it does, it could be huge.
Exactly.
Uh,
All right, let's shift gears to dividend investing.
oh, okay. This sounds interesting.
This one is like planting a fruit tree in your portfolio.
Okay. I like that.
So you're investing in companies that share their profits with shareholders
Right.
through these things called dividends.
Dividends, okay.
And so those dividends
Yeah.
provide a consistent income stream.
Oh, okay. So you're getting paid regularly.
Exactly.
Got it.
Which can be really appealing for investors who are looking for
Yeah.
steady cash flow, maybe for retirement or to reinvest
Makes sense.
and grow their wealth even further.
That's a good strategy.
Right.
Yeah.
Okay, next up we have index investing.
Index investing. Okay.
This one's kind of like buying a slice of the entire market pie.
So you're not picking individual stocks.
Exactly. You're not betting on individual pieces.
Interesting.
You're getting a piece of everything.
Okay.
So with index investing, you're tracking a broad market index,
Mm-hmm.
like the S&P 500.
Okay. Yeah, I've heard of that.
It's a diversified approach.
Right.
And for a lot of people, it's a hands-off way to just participate in market growth.
So you don't have to be constantly checking the market.
Exactly. You don't have to pick and choose individual stocks.
I like that. It sounds easy.
Yeah. It can be a good option for people who, don't want to be super involved.
Makes sense.
Okay. Now this one's interesting.
Okay.
Momentum investing.
Momentum. Okay.
It's all about capitalizing on trends.
Right.
You're identifying stocks that are already going up,
Mm-hmm.
and you're trying to ride that wave even further.
So catching a wave when it's already cresting.
Exactly.
Okay.
But as you can imagine, timing is super important.
Yeah, you don't want to get caught when the wave crashes.
Yeah, exactly. You don't want to ride it for too long.
Right.
You got to know when to hop off.
So how do you know when that is?
That's where it gets tricky.
Yeah.
You're looking for patterns like increasing trading volume,
Mm-hmm.
positive news flow,
Okay.
consistent upward price movement.
Right.
But you also need to have a sixth sense
Oh, wow.
for when that momentum might be fading.
So it's not just about the numbers.
Not just about the numbers.
It's about feeling the market.
It's about feeling it. Yeah.
Wow, that's interesting.
Yeah, it's a little more intuitive.
Okay.
All right, let's talk about creating that financial cushion
Oh, yeah, that's important.
with income investing.
Come investing, all right?
This strategy prioritizes investments that generate regular income.
Okay.
So things like bonds,
Mm-hmm.
dividend-paying stocks, REITs.
Real estate, got it.
It's all about building a portfolio that throws off cash.
So, like a steady stream of income.
Exactly. That passive income can
Right.
supplement your earnings, fund your goals,
Mhm.
or just, give you that sense of financial security.
Yeah, that peace of mind.
Exactly.
Okay, cool.
Now, for the brave souls out there,
Oh, here we go.
we have contrarian investing.
Contrarian. What's that?
This is where you go against the grain.
Ooh, interesting.
You're looking for opportunities where everyone else sees fear.
So you're like swimming upstream.
Yeah, you're like a salmon swimming upstream.
Got it.
Contrarians believe that the market can be irrational sometimes.
Okay, yeah. Sometimes it's driven by emotion,
Exactly.
like all logic.
They hunt for undervalued assets or companies that have been unfairly punished by the market,
Do I
betting that their true value will eventually
shine through?
shine through. Exactly.
So it's a long game.
It is a long game,
Okay.
and it requires a lot of research
Yeah, you really got to know what you're doing.
and a strong stomach
Right.
because it can be volatile.
Makes sense.
All right, back to the classics.
Right.
Buy and hold.
Buy and hold classic.
This one's for the patient investor.
Okay.
You're investing in quality assets
Mm-hmm.
and letting them grow over the long term.
Long term, okay.
You're riding out all the ups and downs.
The market's going to go up, it's going to go down.
Exactly. It's like a roller coaster.
But you're just holding on tight.
You're just holding on.
riding it out.
It's a simple approach,
Yeah.
but it can be very powerful.
Because over time,
Over time,
the market tends to go up.
tends to go up,
Right.
and you avoid all that stress of constantly buying and selling.
Yeah. You're not trying to time the market.
Exactly.
Just letting it do its thing.
Let it do its thing.
I like that.
Okay, if you're someone who likes to adapt to changing conditions, sector rotation might be for you.
Sector rotation. Okay.
It's about shifting your investments between different sectors.
Like what kind of sectors?
So like tech, healthcare, energy.
Oh, okay. Those are big industries.
Yeah, those are the big ones.
Mm-hmm.
And you're basically trying to figure out which sector is poised for growth
At any given time.
at any given time. Exactly.
So you're like always looking for the next hot sector.
Kind of, yeah.
Okay.
It's like adjusting your portfolio with the seasons.
I like that analogy.
Right.
Yeah.
But to do this effectively,
Mm-hmm.
you need to stay informed about economic trends.
Right. You got to know what's happening in the world
And you got to be able to identify industries that are likely to outperform
in a particular environment.
in a particular environment. Yeah,
So it requires a lot of research.
it does.
Okay.
And finally, let's talk about protecting your portfolio
Yes. That's important.
with risk hedging strategies.
Risk hedging.
These are tools like options and futures.
Okay. Those sound a little complicated.
They can be, but
Yeah.
they can be really helpful for investors who prioritize mitigating risks.
So you're basically trying to protect yourself from losing money.
Exactly. It's like an insurance policy for your investments.
Okay. That makes sense.
It can help limit your losses during market downturns.
So you're not losing everything if the market crashes.
Exactly.
That's good.
So we've covered a lot of ground today.
We have. That was a lot of information.
But I think the key takeaway
Yeah.
is that there is no one right investment strategy.
Right. It's not one size fits all.
Exactly.
It depends on your individual goals,
Your risk tolerance.
your investment style.
It's about understanding your needs,
Yeah.
doing your research,
Mhm.
and making informed decisions that will set you on the path to
Reaching your goals.
achieving those financial aspirations.
Absolutely.
So we've talked about a lot of different approaches today,
We have.
but the real journey begins with your own exploration. So keep learning, keep questioning, and you'll find the investment strategies that resonate with you.
And help you achieve your financial goals.
Exactly.
Sounds good to me.
Awesome.
I learned a lot today.
Me too.
Thanks for having me.
Thanks for coming on the show.